It's 10 a.m. here in Lagos. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwagu.
Great to have you. I'm Ladi Williams, and let's look at what's in the news. After several days of tense talks, the Organization of Petroleum Exporting Countries and its allies abandoned their Monday meeting as a worsening fight between Saudi Arabia and the United Arab Emirates blocked a supply increase. What happens next will determine whether the breakdown of talks could escalate into a conflict as bitter and destructive as last year's price war. At stake is the stability of the global economic recovery amid growing inflationary pressures and the ability of the Producers Alliance to retain its hard-won control over the oil market.
From international oil majors to Middle Eastern petrostates, the market will be watching keenly in the coming days as Riyadh and Abu Dhabi publish prices and negotiate volumes for their August crude supplies. A disagreement over how to measure production cuts obtained a tentative deal to boost output and swiftly devolved into an unusually personal and public spat between Saudi Arabia and the UAE.
In the meantime, oil prices rose slightly this morning after the previous day's rally, supported by expectations of a tighter market as output talks of OPEC Plus nations were called off, but concerns that members may start to increase production at capped gains. Brent crude was up 7 cents at $77.23 a barrel after gaining 1.3% on Monday.
And U.S. West Texas intermediate crude futures were at $76.38 a barrel, up 1.6% from Friday's close, having traded through a U.S. holiday to mark Independence Day without a settlement. Ministers of the Organization of the Petroleum Exporting Countries and its allies, a group known as OPEC Plus, called off oil output talks and set no new date to resume them.
And we'll discuss further on commodities market update with the CEO of Financial Derivatives Company, Mr. Bismarck Rouhani. That's next. This is Business Morning.
All right, to talk more on commodities, we're being joined by Mr. Bismarck Rouhani, the CEO of Financial Derivatives Company. Thank you very much for joining us. Good morning, Mr. Rouhani.
Great to have you.
Well, OPEC Plus has called off its meeting without reaching a deal. What do you make of this, what we call it, continued loggerhead between Saudi Arabia and UAE?
Yeah. First and foremost, you have to understand market structure. What you have is an oligopoly, which is few suppliers and many buyers. Because of the pandemic and even pre-pandemic, there was already some tussle between the major suppliers. Now, in a cartel, you have what they call a price leader and price follower. As far as we know it, Saudi Arabia has been a price leader for many years. So, but then when the markets got into balance, Saudi Arabia now reached out to Russia. So you now have OPEC Plus and Russia. So with those two countries, they're able to control principally the major supply in the markets. Now, what has happened is that as we get back to balance, then other smaller players begin to throw their weight around to actually establish their own leadership role. So what has happened is that the UAE is now saying that we need to establish our position as a major supplier and as a price leader. And that the cutback, in all, the cutback was about 9.7 million barrels, but they have actually restored about 4.7, right? And now there's about 5 million barrels left to put in. So UAE is saying that we need a bigger share of this 5 million barrels, and we want it now. The OPEC Plus is saying we would release 500,000 barrels a day every month from now till 2022, so that they don't rock the market. Or Saudi Arabia says, we have nothing to, UAE says we have nothing to lose, and so that's the deadlock. The truth is that in the end, in a price war, nobody wins. So I suspect that within the next 4 weeks or 2 weeks, they'll come up with some kind of agreement. Don't forget, at $77 a barrel, even shale oil becomes profitable, right? And so supply begins to kick in. But the UAE makes a point that with renewable energy and all sorts of attempts to liquid hydrogen and solar energy, the obsolescence of oil is a reality. And the growing irrelevance of OPEC is a function of time. So make hay whilst the sun shines, because the oil in the ground will not be as valuable, right, in a few years' time than what it is today. So that's the key issue.
But if this stalemate, continues, what happens to output in the future?
Well, the point is that at what point, who cares about output if nobody's going to be buying the oil in a few years' time? Don't forget, electric vehicles, Tesla, and all these other guys are making, even now, there are aircraft now which are using liquid hydrogen, right? And even the space shuttles are using this kind of thing. So what UAE is saying is that, look, I want my money today. In any case, the money today is more valuable than money in future because of inflation. So, but that is not to write off oil. The truth is that every oil-producing country, including especially countries like Nigeria, have to be, one, maximize the revenue and optimize the use of the revenue. If you waste it, then there'll be nothing left. Especially
like
when you have
we're seeing, we saw oil inch closer to, $80. And of course, I know that a lot of people are calling for $100. I don't know if you see that happening. And if that happens, having a longer, higher oil price, what would be the implication for,
Nigeria?
Yes, both Nigeria oil importers and exporters, of course.
Well, let me take it back. The reality is that today, at $77 a barrel, we are almost 100% above the benchmark price, and we are about almost 30% higher than what it was about 3-4 months ago. So technically speaking, oil-producing countries should be clicking the champagne glasses, right? But for some who had structural problems,
like
right?
Nigeria.
Like Nigeria, right? The oil revenue only masks the problem. The problem will still emerge. So you've got to deal with that. And then you have to come to terms with the fact that what are you doing with the oil? Because after a while, and a short while for that matter, you will not have that revenue to utilize. So you can see countries like Kuwait, Saudi Arabia already invested and planned for that day when there's no more oil. For some who are more reckless, then when that day comes, you'll be considered one of the former rich men.
So what does this mean for, inflationary pressure and, of course, global economic recovery?
Well, let's take a step back and say for the global recovery, I don't have a problem because the U.S., which is the world's largest economy, is projected to grow by almost 7% this year, based on base year effects of last year. China is going to grow maybe at about almost 6%. Even the European Union, the laggards, are going to grow about 2%. Nigeria, with some luck, will grow maybe about 1.5 to 2% if things, we don't have a third wave or something like that. Now, but growth is one thing, but sustainable and inclusive growth, which means employs people and reduces the amount of tension in the country, is another thing. So relating it to a question on inflation, we have seen inflation, consumer price inflation, according to the official data, actually declined marginally. But we have a different view because by this time last year, the country was in lockdown. By this time last year, there was no interstate movement. By this time last year, the airports were shut, only, no international flights. Therefore, if you were comparing the price of a basket of goods last year when the markets were shut, and this year, you would not the base year numbers may not be reliable. In other words, how could you have gone to a market to go and ask people what their prices were when the market was not open? So we question and we raised eyebrows and doubts about what the data of last year was. Having said that, the truth is that if you look at month-on-month inflation in Nigeria, according to MBS, it's actually increasing. So we have month-on-month inflation increasing, we have core inflation increasing. And then when we look at the narrow basket, you begin to see, for example, we took 5 products. The only one that stayed flat in the last 4 years was Coca-Cola, because it went from 100 naira to 150 naira. It went up by 50%. Rice came down marginally, but all other products, flour has gone up 28.35%, maize has gone up by almost 20%, Coca-Cola, in fact, I was wrong, has gone up by 50%. It was 100 naira 2019, it was 100 naira a bottle in 2020, it's now 150 naira. Cement, of course, has gone up to 4,000 naira.
Yeah.
So when you look at that, you'll find that 27.72% was the growth in prices, increase in prices in 2019 to 2020. And this year, we are seeing it go much higher, up to by 33%. So the jury is out. I think by the time the data comes out, we'll begin to see this. And
again, your projection here shows you took a couple of locations, and it showed that you're projecting 18.1%.
Yes, we are projecting 18.1%, but it's a narrow...
But one would ask why. I mean, when we're having the MBS inflation data, declining, yes. So what makes your data different? From...
No, MBS is looking at the entire nation. Mm-hmm. We are looking at Lagos. So it's a narrow market and a narrow sample. So it only points to the fact that within the Lagos metropolis, we are seeing higher prices, maybe in some other parts of the country. But the question you ask, what's driving this? Mm-hmm. The exchange rate depreciation did not take place until May 24, so the effect of that will only be felt in June. The price of petrol has remained rather relatively stable, right? And that also has a trigger. But price of diesel, as of today, is at 295 naira a liter, while the price of petrol is 165 naira a liter. Typically, in normal markets, petrol is more expensive than diesel, but diesel is fully deregulated while petrol is subsidized. So those are some of those distortions that will be corrected as we go along.
Yeah. Now, in an inflationary environment, of course, some make money and some lose money. So how would you say the fast-moving consumer goods companies have fared in this inflationary environment?
Okay. Very good question, because the reality is that when you face a price increase as a consumer, two things happen to you. One, because inflation is a thief of income, you have what we call the income effect. It means the amount of money available to you to spend has reduced. The immediate thing you deal with is substitution. So if you are eating cheese, maybe you take butter. If you are drinking coffee, maybe you take tea. And if you're drinking beer, maybe you drink Coca-Cola or something like that. So, but no, they are not substitutes. But now the reality is that consumers are beginning to switch as they get squeezed, right? Now, what fast-moving consumer goods companies have been doing, they have been looking for cost efficiencies and absorbing some of the price increase and passing on the rest to the consumers. Those who cannot do it have actually suffered. So, and that brings you to the fact that if you look at all of these companies, Dangote Cement, Unilever, Cadbury, Nestle, Flour Mills of Nigeria, most of them have actually thrived in this period, even though because they've pushed prices up marginally, but also they've been able to absorb some of this. So now, if you look at them, you now look at a company like Flour Mills of Nigeria, which is quite interesting. Flour Mills of Nigeria are doing about three things at the same time. Number one, they are hunkering down. They are the dominant player in the flour milling business. Two is that they are integrating backwards into feed milling, right? They have premier feeds, and they are pelletizing feed. So you actually have feed made in mash form, and you have feed made in pellets. Pelletization is very expensive, but it gives the protein, the chicken, the turkeys, and all that full benefit of the feed that is being put in. And it also reduces the disease factor. Not only that, they've actually, Flour Mills of Nigeria have gone backwards doing the Anchor program, trying to encourage Nigerian wheat growers, although the wheat grown in Nigeria is of a completely different quality and fiber than the wheat that is imported, because for the wheat we used to make our bread, the Argentinian wheat, hard red winter wheat, Canadian wheat, and then, of course, US and Russian wheat, because the taste of bread here is totally different from the taste of bread in other places, and that we've configured that over the years. So they've done well in the extent that they've gone also into irrigation, trying to ensure that we deal with some of the problems of growing agricultural products. What has it led to? It has led to a fact that they've seen their revenue increase by 34%. That is from 573 billion to 771 billion. They've seen their cost of sales have gone up by 31%. Their net profit has gone up from 11 billion to by 125% to 25.7 billion, right? And their free cash flow has actually increased by almost by a significant amount. Year to date, the stock has gained about 13%. So, and the reason why we are talking about flour mills is because they are the only company that has released their second quarter earnings so far. Others will, but one can expect that companies like Dangote Cement, companies like Nestle, and companies like MTN are also going to be coming forward with stellar results. So what it means is that in a difficult environment, an inflation environment, the strong get stronger, the rich get richer.
And the poor gets poorer.
I didn't say that, you said it.
The poor gets poorer.
All right,
yeah.
let's
All right.
look at the second half of the year. What's your macroeconomic outlook, for the rest of the year?
Well, let me put it this way. These are difficult times. And trying to make projections is a treacherous business. But I'll guess two things. One, the reality is that we are going to grow. The second quarter growth numbers that are going to come out will be much stronger than second quarter of last year, because last year we had a contraction of minus 6.3%. So if you've fallen so low, to rise is not difficult. So it is what actually happens to the economy as a whole, and when will it create jobs and reduce insecurity. We are threatened by insecurity, we are threatened by inflation, we are threatened also by, we are on the fiscal cliff, that is, we are having a supplementary budget. Yeah. So generally speaking, I think that the economy will flatline and will begin to grow towards the end of the year. We are going to be threatened by inflation. I think that the exchange rate mechanism that is being introduced, if the central bank can increase the supply of forex, will lead to some kind of some convergence, right? The exchange rate is a tricky one. But then we also have to deal with, you raised it initially, that if the price of oil is at $77 a barrel, then what happens if you have to remove the subsidies? And if you remove those subsidies, it means definitely that you could see the price of oil as high as maybe 280, 300 naira a liter. And how you deal with that is a major issue at this time.
Everything is going to go
Purchasing power will continue to drop. Anyway, thank you very much, Mr. Rwani, for your time.
Thank you for having me.
Always great to have you, sir. Thank you.
Okay, we take a break now. When we come back, we look at KPMG's CFO Outlook Survey. Tola Adeyemi, partner and head audit services, KPMG Nigeria, joins us next. To stay with us. KPMG last week published its annual CFO Outlook Survey. The survey provides valuable insights into how CFOs and their organizations view the business environment, what they require from the government, and their response to the challenges being faced. Let's bring in Tola Adeyemi, our partner and head audit services, KPMG Nigeria. Thank you very much, Tola, for joining us on the program. Good morning.
Thank you, and good morning. Thanks for having me.
So why is the CFO Outlook Survey important?
It's extremely important because it provides a barometer as to how the chief financial officers of companies in Nigeria, how they view the economy, and more importantly, how they are reacting to the dynamism within the Nigerian economy. As you know, Nigeria has never been an easy place to do business. So for companies, it's all about how do we manage our businesses to cope with the environment within which we operate.
All right, Mr. What are the key trends shaping 2021 as highlighted in the survey report?
Well, the main trend, of course, is the lingering effect of the COVID-19 pandemic and what that has meant to not only the global economy, but also the local economy. Now, we know that that pandemic resulted in a slowdown and slower growth. And that in turn meant that governments all across the world have had to react to this in terms of their fiscal policies and their monetary policies. Companies at the same time have had to adapt to these policies, and this has been a major factor driving the outlook. So with COVID-19, you've seen things like remote working, you've seen things like having to rely more on technology. The other trend that emerges are social political trends coming into the fore. And we see these in Nigeria as well, with rising insecurity that characterizes the economic environment. The third trend is technology, because in spite of what's happening globally, in spite of the social political challenges, technology continues to march forward, and we continue to see businesses being disrupted by technology.
Now,
so these are the trends. Yeah.
Yeah. So, what initiatives are CFOs taking, to mitigate the impact of COVID-19 on their business performance?
From the survey that we did, we see some very significant moves happening. The first and perhaps the most obvious one is a move towards more cost optimization. And when I say cost optimization, this differs from the traditional approach of just looking to where can I cut costs. This is more about taking a strategic view to costs and thinking about how we can drive efficiency using technology to lower the cost of operations. The other thing, alongside the cost optimization, we're seeing an increased use of technology. Companies are leveraging cloud-based technology in particular to respond to the work from home challenges and also to just lower the overall cost of operations. One other significant thing that comes out from the survey is the supply chain and how companies are moving from what you would call just-in-time supply chain to a just-in-case supply chain, because the pandemic has shown us that supply chains can easily be disrupted, and it's important that companies build in some spare capacity and resilience, really, into their supply chains. The other thing companies are doing is outsourcing. So we're also seeing an increased tendency for companies to outsource non-core operations as a way of driving efficiency and lowering costs. So the COVID-19 pandemic and the economic situation has brought about a lot of ingenuity in how companies are reacting to this in order to stay profitable. The key words for me will be proactivity and resilience.
All right, tell us about the concerns CFOs that CFOs have about the prospects of growth in the economy, and how does this impact their organizations?
Well, the previous segment spoke to some of these concerns, because CFOs are essentially concerned with how the government is responding to the challenges thrown up on the economic front, how they're responding in terms of their fiscal and monetary policy. So we see CFOs being perhaps less optimistic about the growth prospects of the overall economy than they are about the growth prospects of their companies. And my sense is that this is coming from a situation of the focusing on what they can control. So they can, to some extent, control their company's reaction to what's happening in the economy. And so they're more optimistic than what's happening generally. The key challenge is the foreign exchange environment. In our survey, that came up as the key issue, the volatility in foreign exchange rates. As you know, businesses hate uncertainty, and the foreign currency situation in the country has thrown up lots of uncertainty. The other thing that has come up, of course, has been the fluctuations in the oil price and what that has meant for our economy as a whole. The third thing they're concerned about is security. I mentioned it earlier, the rising insecurity, because this means businesses, on top of having to deal with pure economic or profitability issues, also have to deal with safety concerns and how to safeguard both their operations as well as their employees.
All right, you did mention the currency issues, the security issue, and of course the price of oil. Are these the three top stay awake issues for CFOs in KPMG's 2021 survey?
They certainly featured amongst the top things. The foreign currency volatility was one, but interestingly, when it came to other stay awake issues, they mentioned the tax environment. Now, CFOs acknowledge all the steps that the government has been taking to improve the efficiency of tax administration. So they acknowledge the move to online tax filing and all the other moves to digitization. But the fundamentals still exist. CFOs are worried about the multiplicity of taxes, which is where you have taxes at every level, federal, state, and local government levels or municipalities. CFOs are concerned about how this multiplicity creates confusion, particularly for the SME sector that's so critical to driving growth within the economy. The other thing, of course, is around the transparency of the tax laws themselves and the process of dispute resolution with the tax authorities. So tax and tax administration remains a stay-awake issue. The third stay-awake issue was COVID-19, which I've spoken about, and what that means for their businesses and how they will deal with that. Because it has really meant that businesses have had to change their operating models. So even businesses that traditionally required face-to-face working, they've all had to experiment with remote working and how to enable their employees deal with remote working. So, you know, these are the sorts of things that are keeping our CFOs awake at night and disrupting their sleep.
I can imagine. But what have CFOs identified as the top three matters that, you know, the government needs to address to enable, you know, ease of doing business, economic growth, and enhance, you know, public trust?
Well, from an ease of doing business perspective, the top three things that came out from the survey, number one was security. So, you know, it's security. CFOs are calling on government to deal with the issues of security across the country. And, you know, this manifests in multiple forms. So we have the banditry, the kidnapping, the nationalistic agitations, etc. All these things need to be tackled because businesses thrive best within a stable and safe environment. The number two thing was infrastructure. And infrastructure is something that's always on the agenda. And here we're talking about the transport infrastructure in particular, because the cost of moving goods around the country is prohibitive. We need, you know, and CFOs are calling on government to improve this road infrastructure, rail, water, and even air to ease the logistics of moving things around. The third stay awake issue is power. Again, this is something that has been recurring, and we know all the moves that have been made to try to fix the issues in the power sector. But there's still issues of funding that need to be addressed in the power sector. There's still issues of efficiency that need to be addressed. And CFOs are calling on government to fix these areas because all these things add to the cost of doing business. If these areas are not fixed, then you find companies are having to spend money trying to create their own little cocoons for themselves. And all of these add to the cost of products and make our products less competitive. So they're really important issues.
So what are the major concerns for CFOs with respect to government's thrust on tax policies?
Well, you know, I alluded to some of these earlier. It's around multiplicity. So CFOs are saying, instead of having all these agencies taxing us at various levels, all these rates, levies, etc., is it not possible to consolidate these to, you know, so that you have, in a sense, one or very few payments that you need to bring this all together? The other thing CFOs are saying is we really need to expand the tax base. We need to, yes, they acknowledge we need to increase our revenues from taxation, but it's not by overtaxing the few who are paying taxes. It's about bringing more people into the tax net. Then there's the issue of transparency and clarity of the tax laws. Now, steps are being made every year as we bring out the Finance Act to clarify some of the areas that were perhaps ambiguous, but there's still work to be done in terms of updating our tax laws and resolving inconsistencies within those laws. So these are the key things. Government is making steps on digitization and trying to make it easier for people to file and pay taxes. But the fundamentals of how the amounts of taxation themselves are determined, you know, and the multiplicity of those taxes, those are the key issues.
Okay, before we let you go there, what level of impact do the CFOs think the African Continental Free Trade Area Agreement have on businesses in 2021?
Well, you know, the Africa Free Trade Agreement came into force finally in 2021, and CFOs recognize that this is a step in the right direction because they have, along with other bodies, have long been advocating that the way for Africa to really thrive is by increasing intra-Africa trade. So they recognize the AfTaC agreement as a way to achieve this. However, it's in its early stages. There's a need for each country, including Nigeria, to develop its AfTaC national strategy that would really ensure we get optimal benefits from this. CFOs are also at the moment in the process of working with in their companies to develop their corporate AfTaC strategies. So in summary, it's something that CFOs see would have a medium to long-term benefit. In the short term, what needs to be done is to really do the hard work of developing the right strategy to maximize the benefits from this free trade agreement. So I would say the benefits are still some way out in the future. The hard work of preparing and putting in place the right mechanisms is what needs to be done right now, and CFOs are working on that.
All right, Mr. Ademi, let's hope CFOs can actually sleep at night. Thank you so much. We'll have to leave it there. And Mr. Tola Adeyemi is the partner, head audit services, KPMG. Thank you so much for your time.
Thank you. Thank you very much, and do have a good day.
Thank you. All right, and now for opening call to the market. Yes, I need to hear that. The equities market saw, marginal gains yesterday. What's going on?
Good morning, Ladi. Well, let me tell you, the month of July, which we just started about some couple of days ago, last week, is beginning to take a very strong, or not too strong, but you'd say a positive turn. We're up 0.8% within just 3 days, 3 trading days in the month of July, and that's about, well, that's as far as Monday is concerned. But take a look at yesterday. What we did was a marginal 0.02%, which translates to about 4.17 billion naira in the value of listed equities there. Of course, some of the investors' interest, it might have seemed weak, but we had 26 gainers against 16 losers. And of course, the gains were from components across the banking sector, the likes of Stanbic IBTC, the likes of Access Bank, and then, of course, added with some insurance components there, as well as the oil and gas. So that countered the massive loss which came from the consumer goods as well as industrial goods counter of the market. So, of course, we also saw more than 35% increase in the volume of transactions. Value was down, deals was much increased. So it just tells you that, well, investors are still trying to forge ahead into the equities market. But to bring us up to speed with what's going on in today's trading at the Nigerian exchange, let's join Mr. Charles Fakroga, who is the Chief Operating Officer at Supra Commercial Trust Limited. Good morning, Mr. Charles.
Good morning. Thank you for having me.
Yes, sir. Okay, so now, the month of July, we spoke with a trader yesterday, and he told us that he's optimistic. Now, the market was just up by 0.02%. So can you bring us up to speed with the trend at the market today?
Yes, like you have said, the market was up 0.02% yesterday. And then even the oil and gas was also up. Banking was up. Insurance was up yesterday. So there is a little bit of optimism in the market. But as I speak to you now, as at 10:30, the market was already up slightly, 0.01%. The likes of Ledger Page, UBA assets are also up. So this is a renewed optimism in the market. Investors are doing a lot of rebalancing, talking to their stockbroker. In many parts of the year, people are ensuring that they do take calculated risk and putting everything they can do possibly to take advantage of this new trend in the market. However, all this can only be possible when the macroeconomic environment begins to improve. And we believe that the government is taking care of that side, is trying to see that the economy is back at its feet again. We also see rates slowing down in the fixed income space. And of course, when that goes down, we expect more people to come to the equities market. And you need to also note that investors will have to balance their portfolio, take some of the fixed income space, and also look at the equities market and begin.
Okay, so now we're in the second half of the year, and in a couple of weeks from now, we'll be having the festivities, the Muslim festivities, and as well, you know, with the later part of the year, we'll be having more festivities. What stocks do you think that investors' direction will be heading to, you know, as the days unfold, as well as earnings in focus?
Yeah, thank you very much. You know, each investor has his or her own objective. There are some investors that they just want to get dividends. There are some investors who want capital application over a long-term horizon. The advice should be specific to each of these investors. Get close to your stockbroker, identify your investment objective, and you now begin to look at stocks that you can pick. For example, if you want to really defend your portfolio, there are blue chip stocks that you can pick. You and your stockbroker will agree on that. And with the likes of Nestle, the likes of MTN Nigeria, the likes of Airtel Africa, the likes of Boa Cement, the likes of Dangote Cement. These are defensive stocks that investors are expected to pick to defend their portfolio. So if you're looking for a cheap stock and you want the price to go up, there are also stocks in every sector that will meet that your objective. It's not left for the investors to do their own little work when they invest this market.
Okay, thank you, Charles, for giving us an update on the NGX. So that was Charles Fakroga, who's the Chief Operating Officer at Supra Commercial Trust Limited. So now we're still at the market. Now at the unlisted securities market, no, let's go over to the fixed debts and fixed income market. It was mixed transactions there. Take a look at it. Deals 13, and the highest there was the 27th of March 2050. Also at the Treasury bills market. Well, Ladi, I would have given you much information on the other markets, but of course, time is never your friend, especially when you're trying to do, when you're having fun.
Yeah, that's fine. Well, Mr. Fakroga says that the market is up right now at intraday. Fingers crossed. Thanks, Aniete. All right, we'll take another quick break now. When we come back, we'll do an opening call to London. Do stay with us. This is Business Morning.
All right, let's see what's happening in London with Juliana. Hello, Juliana. Good morning. So how are investors in London watching oil prices and treating oil-related stocks amid OPEC Plus dispute?
Good morning, Chimizzy. Well, they're watching very closely, and of course, any raise in the price of a barrel of Brent crude oil is going to lift the oil majors. So Royal Dutch Shell and BP are all helping the FTSE maintain positive territory at early morning trading. And of course, this is all about this huge spat between Saudi Arabia and the UAE. Last week, we had two rounds of talks that seemed to have failed. I think OPEC Plus members did agree that they were going to gradually increase the amount of oil they were pumping every day, which of course had a massive cut because of the pandemic last year. But the UAE not happy about the production, the baseline production, of where they are going to calculate these costs. Talks were supposed to happen yesterday. They were obviously cancelled. No date yet has been put in place for further talks. And so there's lots of volatility. That's obviously why the oil market is rising. Lots of suggestions that perhaps a barrel of Brent crude could reach $100. Of course, this is all speculation, but nevertheless, Royal Dutch Shell and BP trading higher at early trading.
Yeah. Again, the PM says employees will no longer be told by the government to work from home from July 19, when most pandemic restrictions in England are due to be lifted. But then, business and union leaders say they still required clarity on this. Just wondering what sort of clarity they are looking for.
I think it's really certainty, to be honest with you, Chimizé. We've had lots of false starts here in the UK when it comes to the pandemic. Work from home, don't work from home, work from home now, don't work from home. But what's that going to look like? A big row in the British press at the moment is about wearing face masks. Should people wear face masks? Should they not? Are employers going to have to ask their staff to wear face masks when they're coming through buildings, even though we know there are so many people that are vulnerable, and perhaps feel safe if they are going to be in crowded spaces with people, let's say, for example, in a lift or in a meeting, if they are going to be wearing face masks? They want the Prime Minister to give clarity on that. But the Prime Minister, Boris Johnson, and the Health Secretary, Sajid Javid, are pushing back on these comments. They're asking people to use their own common sense. But, of course, if you're running an establishment, common sense doesn't work. You need legislation and accountability. 25% of the working British public are still working from home, according to the latest data from the Office for National Statistics, which goes back to May. So there is going to be millions of people now descending onto public transport and back into boardrooms. What do we do with them? That's the clarity that they're asking for. And hopefully before July the 19th, the Prime Minister will provide that information.
All right, we'll get more update from you later on Business Incorporated.
Thank you.
And now to the crypto market. Ladi, what do we have there?
Well, this morning at ATM, we had a green Bitcoin, Ethereum, and a major altcoins. We're all in the green this morning. Market cap, $1.46 trillion, up about 1.81% this morning. 24-hour volume traded in the total crypto market stands at $70.89 billion, up 5.66%. We have Bitcoin dominance at 44.57. At ATM, it was 34,700, up 1.49 as the price of Bitcoin. 24-hour volume traded was $26 billion. We still see the volume drying out there for Bitcoin. But at this morning, looking at the 4-hour chart, we have the bullish MACD cross and the price hitting the simple moving average line on the Bollinger Band, and have some volume coming in there at looking at the 4-hour chart. Ethereum, $2,329, up 2.34%. 24-hour volume traded in Ethereum, $19.91 billion. At the peak of the previous this bull market, we had volumes of about $60 billion traded in Ethereum, but now we're having volumes within the range of 19 to about $30 billion. Top bought by market cap, BNB, $319, up 6%, is the biggest mover with the top alts there. Let's talk to Gilbert Joe Patton, our digital market analyst. Hello, Gilbert.
Yes, good morning, Mr. Ladi.
Good morning. Good morning, Bill. So we see the CBDCs are ramping up right now with the Bank of France carrying out its fifth central bank digital currency experiment. Tell us about this.
Okay, this actually is a pointer to the fact that the blockchain and cryptocurrency revolution is inevitable at this point, where you see central banks of the world carrying out their own experiments and plans also to issue their own digital currencies. And right now in France, have carried out their own fifth experiment. And any moment from now, I think this is going to be implemented, and we are going to see other countries follow suit at this point.
All right, but who's going to need Bitcoin when, you know, all these countries have their own digital currencies?
Okay, people will rather choose a currency like Bitcoin that is less manipulative, is deflationary, transparent, and also provide privacy rather than using currencies that is controlled by the government. Although it is an advantage if governments of the world start issuing their own digital currencies, because this is going to make such currency more accessible to people. So it's rather an advantage, and it is game on for such country.
Okay, so the CBDCs will be centralized while Bitcoin remains decentralized?
Yes, and purely free.
Okay. All right, so at this hour, Bitcoin is trading about $34,200. Had a pullback. What's pushing sentiment?
What's your question?
I said Bitcoin is trading at $34,200 at this hour. It's had a pullback from about 34.7. What's pushing sentiment this morning?
Well, I think right now the market doesn't have a direction yet.
Okay.
We are still ranging in its local resistance and support. So right now, I think the market is more neutral at the moment.
Neutral. So bull market on pause right now.
Yes, but I think we are close to the market deciding its new direction. We just have to be patient.
Where do you see the bottom, though?
Well, my bias, though, I personally think we have bottomed.
Okay. All right, Gilbert. Thank you so much.
All right. Thank you, Mr. Ladi.
All right, let's look at the top odds by market cap. Only Dogecoin is down in that counter at 23 cents, down 1.10%. The meme coins are not doing well with the likes of Shiba Inu, Koshi Inu, and the rest. Top five gainers, we have KCS, KuCoin shares. That's the coin for the KuCoin exchange. Doing really well this morning, about 40.98% at $10.86. We have Aave at $334, up 21%, and Rune at $7, up 16%. Top five losers, XDC. XDC has had a good run, but it's down, had a pullback there, down 5%. And Telcoin was rampaging earlier in the year, but it's at 2 cents, down 1.45%, and we have Doge there, 23 cents. So the market is not looking so bad, Chimmy.
Well, let me answer that question. Who will be needing Bitcoin if central banks are coming up with their own digital currency? Well, as soon as the Central Bank of Nigeria comes up with its own digital currency, I won't be needing Bitcoin. I don't have any anyway.
All right.
So I won't be needing Bitcoin. I'll rather do the central bank's digital currency where perhaps I am sure.
Stay comfortable with your centralization, I guess.
Absolutely.
Right.
All right. That's it on the program. Thank you for watching, and don't forget to join us later in the afternoon by 1:30 for Business Incorporated. I'm Chimezi Obi Iwawo.
And I'm Ladi Williams. Thank you for watching.
Welcome, sir.